Welcome to the Capital Spreads Weekly Update. Today is Thursday the 15th of April 2010. Well, the week so far, it's been quite a busy week in terms of news, both economic and political. You have had, for example, the European Central Bank coming to the rescue of Greece and offering them loans of up to 60 billion euros if they require them. At the same time, the US earnings season is in full swing, and you had a number of key blue chip stocks out the US earning record results that have actually exceeded analyst expectations. You've also had interest rate decisions both from the European Central Bank as well as the UK Central Bank. Those decisions left rates unchanged for the foreseeable future at least. As a result of all this, you've had many of the indices continue to power up from here off the back of very strong positive sentiment. So the situation as it currently stands, the euro dollar is trading around 136.35. It broke through the pivotal 135.00 level and seems to be trading between 135.00 and about 136.50. Now, this retracement has been off the back of the announcement by the ECB that they will offer loans of up to at least 60 billion euros to Greece and maybe possibly more. I have a chart to show you regarding what I mean about the euro. You can see the euro has been in a downtrend since December 2009, and most recently it's actually been broken. So any short positions are certainly worth covering at the moment, as you could possibly see quite sharp moves both on the upside as well as the downside. The FTSE is currently trading around 58.02, up about 15 points in the day. It seems to continue to trend higher, and that trend hasn't been broken for the last few months or so. The net turn target certainly seems to be at 5,900, possibly even 6,000. But at the same time, considering that we haven't had a retracement in the last few months at least, it might be worth keeping in mind that we could certainly get sharp corrections with some profit taking on the smallest possible news. Both gold and oil have also broken out their well-established ranges of the last few months or so. Gold had been trading previously between 11.25 and about 11.45. It's currently trading around 11.54. It now seems to be ranging between about 11.45 and about 11.70, so it might be worth playing that as a range play once it hits one of those extremities. While oil is currently trading around $86, having broken out between the $75 and $83 range, a well-established range that had been trading for quite a while. The $91 target certainly seems to be a possible and feasible target, at least in the short term. And if it hits $91, we could certainly see it hitting around $100. In terms of figures for the week going forward, there's a number of figures to possibly keep an eye out for tomorrow, which could certainly move the market. You have the EU CPI coming out tomorrow. Now, it isn't actually expected to be changed much. However, considering that many people are actually focusing on the euro at the moment, it could certainly be one that moves the markets. Later on tomorrow, you've also got the housing starts at the US, as well as the Michigan consumer confidence, I should say, at the US as well. Now, each of those figures, if they prove to be positive, could provide the impetus that we require for the markets to certainly continue powering higher from here. In terms of client positions, many of the clients, as can be expected, actually short many of the indices at the moment, believing that the market is due for a correction, and I don't really blame them. So, for example, at the moment, they're short the S&P, the FTSE, the DAX, as well as the Dow. At the same time, they continue to hold on to long gold positions, a position that they've held over the last few months, and that doesn't seem to be changing anytime soon. They've also gone short the oil, believing that oil is possibly due a correction, considering it has actually powered up quite strongly over the last few days or so. In terms of the theme of the week, I would say the theme of the week would probably be the positive sentiment that we've had in the market and the positive economic data that actually seems to be supporting the positive sentiment. Everything seems to be looking a lot better than it was certainly 2 weeks ago, and I believe many people are now believing that we may not encounter a double dip recession, which is a big fear that was actually playing on many people's minds. It certainly seems to be trending higher from here, so it certainly looks like we may be out through the worst. However, I would recommend that it's certainly worth keeping an eye on for any sharp corrections on the downside, considering we haven't had one for at least a long period of time now. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com. Thank you.